Hello traders and welcome to another weekly market forecast video. Hopefully everybody's having a great weekend and ready for the next week of trading. So let's start first with the dollar index as we usually do. But before that, I would like to share with you a couple of updates. We are moving forward from the next week with a new format in our membership trading community. So we will have only one monthly plan, and here it is on the screen. You can see exactly what we offer and the changes. And also I would like to announce that we are starting working on our own official website, which we will include an extensive and comprehensive market analysis and trading execution type of ebook and video series, which will be available once the new website is up and running, which it can take us anywhere between 1 to 2 months time, depending on how big and how complex we are going to do it. Our members that have been with us for at least 6 months in the premium plan in 2024, they will receive everything for free, which is what we have been teaching them anyway during the previous model we had, the 4 weekly live sessions, which now, as you can see with the new updates, it will be on Wednesdays and Saturdays. So everything will be added together and it will be available for everyone. And plus, we are going to give you more content here on our YouTube channel for you guys. And also, we would like to raise the attention that what we are going to be doing in the future is only to benefit the ones that really need it and the ones that really want to make things happen and stop doing things wrong again and again, and finally be able to break free and understand how to trade properly the financial market with different types of strategies and long-term and shorter-term approaches. So let's start now with the dollar index. We will provide more information about these updates as we go along in the next few days and weeks. So in the dollar index, after this move to the upside, we are looking for this move to the downside next before the next structure. So for the bigger picture in the dollar index, we explain that in detail to our members. So if you are not already a member, consider joining with the link in the description. Again, we explain very basic stuff here on YouTube, and we provide the comprehensive analysis, and we show you ahead of time the bigger picture and the different possibilities, and also our trade recommendations, which we have been doing amazing for the first 6 months that we have started. So dollar index next move is to the downside before the next structure takes place. For the dollar yen, we have reached this Fibonacci extension area, and we have seen over here how we are trading within this wedge formation, which is a typical diagonal structure before a next move. And the next move in this case is going to be to the downside before the next structure as well. So for the dollar yen, ideally we are looking for this move to the downside, and this is the next move that we should be able to see in this pair. For the euro dollar, last week we have explained that we were gonna see something like this happening, sideways to lower market. So this is what we got. More downside in the euro dollar in this way during the last week. We have kind of expected that more downside will take place and breaking below these lows from the beginning of August. So this is where we are. But we have got a potential low on the 17th. And this low on the 17th is expected to provide us with a bounce to the upside close to the 110 area, 109,600. This will be ideally the next area for the euro dollar. And this is the next move that you can focus on for the next week ahead. For the pound dollar, we have got this ending structure right here before the bounce to the upside that we have explained. So also this pair gave us exactly what we expected last week, which was a choppy price action to the downside. And now the market from here is ready to ideally give us this reaction to the upside towards the 132 area before the next reaction then. So this will be the move that you can focus on for the next week ahead in the pound dollar. For the pound yen, after this big move to the upside that we expected last month, the market has been consolidating. So ideally, we need to see one more push to the downside to get more buyers and then move the market to the upside. So the next bigger move overall should still be to the upside. However, short term, we might expect to see a drop here before this move to the upside. So you have to be cautious if you are trading this pair. For us and for our members, we do not recommend any trades on this pair because it's a 50-50 scenario whether this happens before this or whether we break up from here. It all depends on how the pound and the yen individually perform. So this is why at the moment it's a gamble, and when it's a gamble, we do not recommend trading. So if you get a dip, then this might be a good opportunity to buy the pair for this move to the upside. But as of today, as of now, the market is 50-50 from this area. EURUSD, we continue the bigger move to the downside. We have got the bounce that we expected, correction, one more bounce, and then the market continues lower. So this one short term can easily also, if it wants to, do something like this and then drop. So in all the cases, EURUSD, it's bearish in the bigger picture. So any bounce in the market, it's a selling opportunity in the long run. So at this stage, it should continue to the downside slowly, but eventually down the line. So it has been trading lower since the peak from early August. We have explained that during the time that this was a fake out move, especially to our members that they know these things ahead of time when they happen. We inform the next structure. So the EURUSD has a bigger target to the downside to reach. So if you want to get those type of analysis ahead of time and the bigger picture, of course, you can join us with the link in the description so you know how to plan ahead your trading, because if you don't have a plan, it simply means you are not going to succeed, because anything without a plan, it's most of the time a failure. So this is what we can see in the EURUSD, and the bigger move is still to the downside overall. For gold, we have made new all-time highs again within a bigger target area in the weekly time frame, which we have showed to our members 6 months ago as well. So we are trading towards that direction. This was a potential buying area for the aggressive buyers that are looking for small dips in the market. 1, 2, 3 swings pullback, Fibonacci extension area. The members know how we use these areas where it's applicable, and the buyers push the market from here $122 so far higher in gold. So we are not expecting anything significant in terms of pullbacks in gold. It should continue higher overall as we head to the next week onwards, and any pullback should remain supported for the time being. For oil, the sellers from this Fibonacci extension area managed to take back control. So we can see that they are still present in the market, of course, because we have explained that oil remains bearish and any bounce, it's a selling opportunity. So you can see, even if I go back in time, that we have been explaining from February, any bounce in oil, it was a sell opportunity down the line. So we are heading ideally to break below the 65 area, the lows from 10th of September, and we should aim for a little bit more downside down the line. So for the bigger area lower that we are expecting oil to reach, of course, you can join us with the link in the description if you want to get the bigger picture analysis and the weekly time frames, how we see them. So oil still is looking for more downside down the line. Of course, in the short term, we can play some games after one more lower. We can do some more choppiness before we trade lower. but still any bounce is going to be another opportunity for more downside in the near future for oil. For natural gas, we have explained before in a previous video about this Fibonacci extension area and the highs from the 4th of October, how this was another selling area. So the market made a big move to the downside, which is telling us that sellers are still controlling the prices to remain within the bigger range of the $2 to $3 range. And we can still see that the choppiness will be present in this market for a long time. So we can expect a more range-bound trading in the weekly and daily time frames. So there is no proper trend in this market present at the moment. So we can also see a very weak RSI, which is telling us that there is a lot of selling pressure in the market, and we can expect different variations in the short term. Is going to be down, up and down market moving forward in this commodity. So if you are trading this one, we would recommend if you don't, because there is no setup or anything interesting to do. And what they're trying to do, they're trying to control the prices to remain stable in the coming weeks ahead. From the indices, the SPX, S&P 500 cash index, we are still heading for the bigger area at the 6,000 or so area eventually. So we are still on track to reach this Fibonacci extension area soon. Any potential dips, if they happen, there will still remain a buying opportunity. So even if we go up and down, the market will still make it to the 6,000 area sooner than later, but it's very risky to look for any trading setups at this area because you don't have a good risk to reward, and this can be a problem. So the buying was here from this Fibonacci extension area, and this pullback in September, and more aggressive buyers, they might have bought this area from the beginning of October, but now things are not looking good for any trading setups in the S&P 500 index. So it's always recommended that you diversify your options. You should never trade the same instrument again and again. And this is one thing that we also teach to our members in our trading community. Quick update on Bitcoin as well. We have extended higher as expected from the lows from August as well. So soon enough, we are going to break above the 69K area, and we have a target area from 72.8 thousand up to 80 something. So this will be the next area for Bitcoin that we are expecting to reach within the next couple of weeks. So the next week or 3 weeks, we should be at this area. So any possible accumulation or dips, they will remain supported in the near future. So of course, for the bigger picture for this one, you can join us and figure it out yourselves. So we have also got some other crypto assets that we do bigger picture analysis, and some of them which we recommended to our members. So if you are into crypto, we have you covered. So consider joining us with the link in the description. So bullish market for crypto, we can see ahead of time. Next area will be this one up here. And finishing up our weekly forecast with the two ETFs that we share, the 3Qs and GDX. So for the 3Qs, we can see that buyers remain under control. They should be looking to extend higher towards the 520 area in the near future. So any dips, they remain supported as we head to those highs, 520 area in the next coming weeks. And also for the GDX, the gold miners ETF, we have got a new high above 25th of September. So we can see that this accumulation, bullish accumulation structure has broken to the upside. So we can expect to trade even higher towards the bigger target area that we had over here. And this was available to our members months before. Even during this time, that we have been trading in April, and especially during the summer that we had these lows in June and August. Our members, they knew that in the weekly, daily time frames, we are heading higher, and this is a bigger target area. So this is where GDX should be trading in the next coming weeks soon. So hopefully you found this video informative and helpful for everyone. If you have any questions, you can email us directly at support@roiforecast.com. If you want to leave us a comment down in the comments, you are welcome to do so. And we would appreciate if you leave a like to the video so we can boost the YouTube algorithm to reach more traders that need our services and analysis. And also, if you are new here, consider to subscribe so you will stay updated for any new video that we are going to publish in the near future, which we are going to increase our volume of videos in the coming from the coming week or so, and expect more content from us in general so you can get to know us a bit better and what we do and why we do it. So enjoy the rest of your weekend, and we'll see you in the next video. Take care.